The case of Peabody was the first High Court case to discuss Part 4A. There are two major principles arising out of this case. In this knowledge clip, we will present an overview of the second principle. The second principle from Peabody indicates that it is sometimes important for a tax office to identify the correct taxpayer in fulfilling the second requirement of Part 4A, that of there being a tax benefit. For instance, take a hypothetical individual taxpayer that owns 100% of a company and assume that the company does not distribute its profits in the form of dividends every year. The company undertakes some tax minimization actions, that is, a scheme to eliminate its assessable income for the year. If the tax office brings a Part 4A action against the individual taxpayer, they might not be able to show that the individual taxpayer had any reduction of income for the financial year. Remember, the requirement of showing that the taxpayer has a tax benefit compares what happened with the scheme with what would have reasonably be expected to have happened without the scheme. Here it could be argued that with the scheme, the taxpayer has not earned any assessable income from the company. However, it could also be argued that but for the scheme, the taxpayer would not have earned an assessable income from the company. Only the company would have, and the company would not have necessarily have distributed its income to the taxpayer. This means that the individual taxpayer has not had any tax benefit. However, had the tax office assessed the company under Part 4A, it would have been able to show a tax benefit because the company has lower assessable income compared to what would have been reasonably likely to have happened had it not entered the scheme to eliminate its assessable income. The case of Spotless, the second High Court case on Part 4A, is also noteworthy because it made clear that it is possible for a scheme to both have a genuine commercial purpose while at the same time fulfilling the third requirement of Part 4A, that the scheme was entered into with the dominant purpose of obtaining a tax benefit.